Welcome to the BOR or Bust podcast. I'm Daryl Henry. I'm here with my boy, Nick Obi. And this week, what we're going to talk about is accessing every company in the world will not get you the best deal on insurance. And I'm responding, in my mind, very clearly to a LinkedIn post that I saw where a guy, I'll just read the LinkedIn post. He said, the insurance industry loves to say, just work with one broker. But here's the question. If no broker has access to every insurance company or specialty program, how do you know the broker you're using has access to the right markets for your business, especially if you're in a specialty niche industry? Is loyalty to one broker the best strategy, or is getting second opinions simply good business? But before we get into that, we're recording this on July 2nd, right before July 4th, and Nick was asking me what I'm going to be doing for if I've got anything special planned for the 4th. And I explained I've got $500 of fireworks here in my attic. And we were talking about that.
Yeah, $500 worth of fireworks in the attic. The first question is, are you blowing them through the roof, or are you going to take them out of the attic before you light them off?
Yes, I am going to take them out of the attic, and I am not smoking in my attic during the period of time while I have $500 of fireworks in my attic. And since I'm in
You typically
Maryland,
smoke in your attic?
well, only when nobody's watching.
Yeah, okay.
No, I don't smoke in
I
my
thought you
attic.
kicked smoking. I thought we learned that on the last episode.
Oh, yeah, I did. I do not smoke cigarettes anymore, but who doesn't enjoy the occasional cigar with friends?
Oh, okay. So no cigars. I thought you were going to go somewhere else. Who doesn't enjoy the occasional bong with some friends? I was like, Daryl, I was not expecting that from you. But
Nah,
cigar, you did a 180 on me. But I get it. So no cigars in the attic with the fireworks there. That seems like a safe play.
that's right. That's right.
It's
And
proper risk management.
correct. And just in case anybody, I do live in Maryland, and in Maryland, you're not allowed to shoot off mortars. So, for the record, we're going to say that there's no mortars and there's nothing that goes off the ground.
Just don't do Jason Pierre-Paul yourself and come in next week with blown off fingers.
That's definitely, yes, that's the plan. And if you are out there and think $500 is a lot, I've gone more on fireworks at different points.
I personally think it's a lot. I didn't even buy those pop rocks things you throw on the ground.
You haven't lived.
Yeah. I'm good with it, man. I'm good. I'll watch the fireworks show from afar. I'm all set on that.
So I'm going to make a corny tie into BOR, because you don't know how good life is until you've set off fireworks and you're feeling like the ashes from the sky fall on your face, and the joy of saying, I blew that up. It's just like winning by BOR, the satisfaction you feel when you get that signed document and how awesome it feels. You just can't know until you get it.
Maybe I'll try it someday, but to me, that would be like getting rolled. You're about to get shot in the face and you just barely avoid it. It's like, I'm good. I'm going to go, I'll just watch them from far away. We saw this is a completely, we'll get on track in a minute, but I was going into high school. It was freshman year. We went to the fireworks, and I went to high school in the city. Manchester, it's not like a major city, but there's 100,000 people or something like that. And we lived in the suburbs, and we go to school there. And I'm a freshman. I'm nervous. I don't know what to expect. And my older cousin, she went to the school we're at, and we're in the city watching the fireworks. And all of a sudden, these two chicks getting a freaking brawl, straight up brawl, ripping each other's hair out, smacking each other in the face with high heels. And my cousin goes, "Oh, I know them. They go to our school." And I'm like, instantly terrified. I'm like, both of those girls could have beat the hell out of me. Absolutely destroyed me with how crazy they were going. And I had long hair back then. I'm like, they can't be pulling out the locks. So anytime I think of fireworks to this day, I think of just that absolute, just beat down in the middle of the street. And then they cleared it away, and the fireworks went off like normal. And everyone's like, "Hey, happy 4th of July. It was a wonderful day." It's crazy.
You get PTSD from fireworks. That's what I'm hearing.
Yeah. Well, about something else, about a chick fight, I guess. It was nuts. So hopefully I don't see any of that this weekend.
There you go. So let's get into it. company
so your little
access.
LinkedIn post, you were telling me before that you hate this guy's guts. If you ever saw him, you'd knock him in the teeth. You couldn't believe he posted that, and you were going to share his name with the, with the podcast.
I felt visceral rage when
I'm
I
just
saw
kidding.
the post.
You didn't say any of that, but you brought it up to me because you're like, hey, well, let's discuss this because it is a good topic, right? And it's like we've heard it a bunch. It's like, well, what about market access? What about hitting every carrier?
Correct.
And we could end the podcast right here and go celebrate the 4th. You don't need every carrier. Done. Mic drop.
So talk me through that. Why do you not need every carrier?
Well, I guess first of all, you have to understand, the consumer has to understand what is their buying strategy. That's the biggest thing, right? And the biggest problem that these consumers have is they have no strategy to go out and get their commercial insurance. You use the fancy word for it, procure their coverage, I believe is what you called it.
Mm-hmm. Yep.
So they have no strategy. So because the key is you have to understand what game you're playing. So and you have to understand that fundamentally no broker out there has access to every market. Even the big top, national firms. And when I say top, like top revenue, like the largest firms out there, they don't even have access to everybody because there's certain exclusive programs, and this broker might have this program for one market or for one niche, and the other competing broker has their own program. So technically, if you go to one, you're not going to get the other person's program. But if you want to play that game of accessing every market, then you need a strategy and you need to actually play the game. And that's the problem right now with most consumers is they have no strategy and they're playing both games poorly. They're not hitting every market effectively, and they're not running a strategic negotiation strategy with one broker who has access to the majority of the market. I would be in favor of the strategic negotiation strategy with one broker, knowing they don't have access to every market. But if you're going to play the other game, at least play it well, at least play effectively, at least know the damn rules. And most people don't, because if you're going to play that game with market access, here's what you have to do. You actually have to access every market. Otherwise, it doesn't work. And what does that look like? How do you do that? You have to hit every direct writer in your space. There might be 3 to 4 direct writers. Then you have to figure out how many brokers out there, regional, national, have exclusive programs, or either that they own and operate. They've got the pen on. They're the exclusive broker is what I'm looking for, or they have exclusive access. Those are two different things. Exclusive access, you can get it through multiple people. An exclusive program, you can only get it through them. So in your industry, as the consumer, there's probably multiple exclusive programs, and then there's probably multiple carriers have exclusive access, and then there's a whole handful of other carriers. So you would have to literally compile an entire list of all these carriers, plus hit all the direct writers. It might take you, 5, 10 brokers to hit it. So if you're going to play the game, play it. That's the game. But that is actually would have a negative effect overall on your ability to get the result.
And why would it have a negative effect? Because I totally agree with that statement.
Well, you were chatting about it earlier before we got on air. And then we said, well, we should probably just hit record. Enough chit chat here.
Yeah, it wouldn't work, because the moment that underwriters realize that you're trying to access every single market in existence, they're going to say, thanks, no thanks, I'm out. Because the fundamental thing that you need to get the best deal from the marketplace is for an underwriter to believe that they're going to win, and to believe that there's someone they have to beat in order to do it. So I'll go one by one. So one, if the underwriter doesn't believe that they can win, they're just not going to work on it. They're just not going to pick up the file, or they're going to bury it in favor of another submission, because they've got too much work to do. They don't have time. What my favorite underwriter, he's a crotchety dude, and he knows that I've used him for LinkedIn posts, and so now he likes to feed me these great one-liners. And he said, Daryl, I'm busier than a one-legged man in a butt-kicking contest. Don't waste my time. And I tell you exactly what this dude does when he gets a submission from a broker he doesn't like and trust. He buries it.
He's told you that. He's confirmed it.
He's confirmed that. He said.
And what's his name and what carrier does he work for?
Out of respect for him, I'm not going
Okay.
to do
Hey, I
that.
get it. You can't give up your source.
I can't. But he's told me there are some brokers I wish I could decline everything they send me because
Yep.
they're terrible submissions. And so if you're going to play the market access game, carriers are going to find out that that's what's going on. Underwriters are going to say, I've got a better shot of winning this other deal. They're not even going to put the time in to offer a quote. Okay. So that's reason why, number one, why it's not going to work. Okay. Reason number two, why it's not going to work is even if you have access to the best market, if that best market doesn't believe that they have to do anything to offer the best pricing tier and the best rating at the best pricing tier, they're they're not going to put their best pricing forward. So if you play the market access game, I think you're actually shooting yourself in the foot.
I would
You
agree.
need you need to have the right markets and the right broker with the right strategy to create the right competitive environment so that the people with the best product are getting the most competitive for the account in order to win.
Yeah, you're better off leaving a market on off. How do I say this? You're better off doing that and missing a market because it's almost impossible for you to hit every market. So even if you run the game where you're trying to hit every market, you're still going to miss some of the markets.
Correct.
So you're automatically not seeing everybody. So if you're not going to see everybody, you might as well play the game more strategically. And so when you think about how do you actually get the best deal, there's three factors that come into play. You have to have leverage. That's what you were talking about, leverage with the underwriter. You have to have control over the process and control the negotiation. You can't let the underwriters control you. You've got to control the situation. But number three is you have to manage your reputation. And reputation could actually damage you more if you have a terrible reputation in the market. If the underwriters think you're trash, then you're actually going to do more damage long term than you would get benefit by getting every market, every carrier, every single year. And so we see it with the last look a lot. Last look works. Why? Because you have leverage. There's another deal on the table and you have control. Underwriter, incumbent underwriter. We're about to leave. We've been with you for 10 years. We have this other deal. It's 40% less. You told us you already gave us your best number. This one's better. We're going to leave in the next 24 hours, 48 hours, whenever the renewal is, unless you match it. What happens every single time? They match it. You can only do that once or twice, maybe 3 times, because by the time you do it the third time, what happens? Your reputation tanks. And therefore, you lose the ability to get a better deal, to get a competitive offer on the table, and all of your leverage goes out the window because now nobody else will insure you. You were talking about the underwriters. I got an email from a client. This is a couple of years ago. This is a buddy of his that was an underwriter. He submitted an account. He said, "I'm looking at this account. Would you consider it?" F that. He wrote it out in all caps. F that. This account sucks. That's what he replied. And my buddy, the client forwarded it to me. And he's like, look at this. This just proves the point that the reputation matters. Because that underwriter, that was the most competitive program for that risk. And they weren't going to get a look at it. And then he got more details on it. They had looked at it 5 years in a row and never won it. He's like, why am I going to waste my time? So, but when he submitted the BOR, it changed the game. The underwriter's like, I will look at it if you get a BOR. Because now I know they're serious and I actually have a shot to write it. And that's the shift. You're better off. Your reputation matters more than hitting every market.
I've gotten the same kind of responses from underwriters, and it's been on accounts that I control too. That's a nice wrinkle. It was a school account, and they were coming to me and they were saying, "Hey, we want you to create competition this year." I said, "Okay. Well, you've been with me. This will be the third year, so okay, I can go for that." And I think he only went to the market 1 year, so okay, I don't mind that. And then she told me, "Oh no, we've actually gone and gotten quotes every year." And I said, well, what do you expect me to do? these underwriters now have seen your name every year. They're going to be tired of you. And sure enough, I sent it out, and from multiple markets, they said, "Yeah, I saw this one 2 years in a row." One of the best markets for schools came back to me and said, "I've quoted this 4 times in 5 years from 4 different brokers and wholesalers. Haven't won any of them. I'm declining to quote." And that's what you're talking about when you say the reputation
Yeah.
becomes trash. It's not just about accessing the market. If you access it the wrong way, you won't get what you want out of these people, because you're dealing with people that have to hit goals, they have to hit objectives, and have to make decisions about what to work on. And if they think that they're going to lose, they're just not going to do it. They're going to make a business decision.
Yep. Because they've got 2, 3, 4, 500 submissions a month that they're working on.
Correct. And we've all been in this situation. It's that, what's the first question an underwriter asks us as a broker? Do you control the account?
Yep. Why do they want to know? Because that's how they determine their ability to win.
Well, let's be real practical. Their close ratios are probably going to be 3 to 4 times better when they're working with the broker that controls the account versus someone that's just quoting. I mean, I got killed on that, because before I learned how to sell by broker record letter, I would get nailed by marketing reps all the time. They'd say, "Your close ratio is really low. Your close ratio is really low. It's in the teens. It's really low." And I'd be saying, "Well, I'm trying to win new business. I don't control the account. That's why my close ratio is low."
And think about this. When I first got started, I was going quoting everything. Prospects like, "Hey, we'll switch if you can save us whatever, 10, 20%, some ridiculous number." So then I'm all excited. I go to the underwriter. "Hey, I need the best price to be able to win this deal." They would ask, "Do you control the account?" "Oh, no. I'm new to the game. I'm just building the book." And they'd laugh. Like, "Well, then you're not going to get the best price." And I'm sitting there going, "How does this work?" So on this side, the prospect's saying, "I need to get the best price in order to win their business and get the best quote." And then on this side, I'm getting told I'm never going to get the best quote because I don't control the account. Like, this is a recipe for disaster. And it was. That's why I lost $4.8 million in premium in freaking 15 days. I didn't control anything. I didn't control the accounts. And that's the control piece. We like to think about it for our terms. And when I was getting going with the BOR, I would present it as, I need control of the markets. I need to manage my reputation. I need to manage my relationship with the underwriters. I. And guess what? The prospects did not care at all. But if we really think about it, it actually impacts them. It's about them. Prospect, you need to manage your reputation in the market. And the way that you do that is you control who represents you, who you allow to go to the marketplace, by assigning them a broker of record letter. You can meet, if you want to interview with 20 brokers every single year, do it. Probably a waste of time. Interview the broker, but don't have them go to the market. And all you need to do is you need to find a broker who has access to about 90% of the market, even 85. If you go too small, if you work with an agency, and this doesn't have to be size of the agency, it just has to be market access.
Right.
But if you go to an agency that only has one carrier, they probably can't run it as effectively. But if they have 80% of the market, 90% of it, they have enough to run the strategy effectively, and it's probably strategic decisions as to why they have certain carriers over other carriers. Hey, look, there's 5 carriers out there that are all in the same thing. They all compete on the same thing. Contractors, for example. You know what? Our agency has 4 of the 5. We didn't get the 5th because of market volume, and the coverages are the same and the pricing's the same. Like, okay, cool. Like, you don't need to then go find that 5th market. As long as that broker knows how to negotiate effectively, that's the key.
That's right.
So it's like, you have to understand the game you're playing. You have to have a strategy, because if you run the market access strategy, then you have to hit every market. And if you're not hitting every market, you're missing the boat because you're playing the middle, and the middle sucks. Said to my wife one
Here's
time, "There's no middle ground. Middle ground blows."
That's right. That's
It's
true.
like,
So here's the other part. Think about it from the perspective of the buyer too. Like, what does the buyer want from this transaction? They want something affordable. They want it to be comprehensive, and they want to deal with someone they trust. And the problem with the market access game and the five broker game is that is not a process that is conducive to building trust, because then the framework you're setting is the only way to hold the market accountable is to pit these people against each other.
yes,
And so what's going to happen in that process? Now you get into broker games. You're going to say brokers arguing about who should represent which company, and they're going to hold on to their quote. They're going until the last minute, and they're not going to be transparent. And they're going to talk down about. They're no longer going to be in a position to be an advisor, because now their job is to take down a competitor and what they're offering, which may actually be a superior offering. You are no longer getting objective advice, it is subjective advice. And you
yeah,
cannot trust subjective advice.
no, you can't. Because because at the end of the day, if you run it that way, you become the insurance broker. You're paying all this money to have an insurance broker and have an advisor to strategically negotiate and review what's the actual best option with you, and you lose that because now you have a parade of brokers coming in, and every one of them is telling you that they have their best. This is the best. This is the best. And you actually have no idea. So you need to then review every option. So if you're going to do that, if you're going to do market access, you might as well go get your license and become an insurance broker, because that's essentially what you're going to have to do. You're going to have to review every option on your own, go through the details, look at the coverage, look at the pricing. Now, the reality is, though, you probably won't do that if you're a consumer. You're just going to pick most likely based on price. And that there's nothing against getting the best price. I'm not against that, but you have to make sure it's the actual best deal. And sometimes the best deal doesn't mean the lowest price. Sometimes it is, sometimes it isn't. And if you think about it, the broker coming in now, they're not advising anymore. They're just selling a quote. That's what I was doing. And I noticed it one day. I'm like, okay, 10 o'clock meeting and 2 o'clock meeting. Get my file from the account manager. Who do we got? Who am I presenting? 10 a.m., Travelers. All right, who am I up against? Liberty. Cool. Get in the meeting. Look, I cannot imagine placing anybody with Liberty Mutual. It is unbelievable. They're disgusting as a company. They don't have these coverages. Travelers is by far the best deal. Look at Exhibit A, all these coverages, all this stuff, right? Then I go to lunch with whatever, probably with Liberty Mutual. They're telling me how great they are. Then I go to my 2 o'clock. All right, who do I got now? Oh, you have Liberty Mutual. That's who we got. Because think about it, in the quoting, it's a crapshoot. You're sending it out everywhere, and then, oh, Liberty wasn't blocked. So now 2 o'clock, I've got Liberty Mutual. Who am I up against? Oh, you're up against Travelers. All right, I got this. Look, I cannot imagine putting anybody with Travelers. Travelers is the most ridiculous company. They are garbage. Their claims suck balls, right? It's like you go on and on about all these things, even though in the morning, you're saying how great Travelers is. Because at that point, you're not being strategic. You're not advising. You are literally a salesperson at that point. You are selling whatever quote you got because you want to get paid. And you cannot blame these people. I did it, right? It's like, hey, sell what you have. We have Travelers. I'm going to sell it. I'm going to sell it on what? Agency services and our value add resources. And here's my cell phone number. And you can call me at any point. If you're going to play the market access game, that's what you're up against. And you can play it, but you have to be prepared for it. You have to understand that every one of those brokers is now selling you on something that may not be the best. And it may not to mention, it may not even be the best deal, period, because the numbers that they get are probably not going to be as good as if you ran the strategy and had one broker go create a competitive environment. Because the reality is, let's say you and I are up against each other. I have Travelers, you have Liberty Mutual. Dude, I'm not going to call you up and be like, Daryl, I know you present tomorrow at 11 and then you're taking them to lunch and I'm coming in at 4 and then taking them for happy hour. But here's what I just wanted to give you a heads up, man. Last minute, who do I have? Liberty? Is that who I said? Let's say I have Liberty. I'm like, dude, Liberty smoked it last minute, dude. They came in, they cut it by 25%, and they added this impossible coverage. I don't know if the prospect mentioned it to you, but it's really important to their operation. Dude, just so we can make sure, who cares who wins the business? I don't care if you win or I win. Doesn't matter, man. I really want the client to get the best deal possible. I just wanted to give you this information so you could call Travelers right before your meeting. You got it tomorrow, and see if you can get them down 30% and add the same coverage. That would never happen in a million years. I would walk in at 4:00 and go, "Did Daryl show you Travelers?" Yeah, Travelers is dog shit. That you don't want to be with Travelers. Daryl's a scumbag. Oh my God. You know how many fireworks he has in his attic? He's a lunatic. It's like, that's what's happening out there. They're not advising them strategically. Whereas if you have one broker, guess what happens? You have the Liberty quote and you have the Travelers quote, and now that one broker can create the competitive environment there. And do you maybe miss out on one or two other carriers that they don't have? Sure, but long term, it is better to run that strategy.
Because then here's what it looks like when it's one broker. Because, okay, when the underwriter knows that's what's going on, they don't give their best price either. They hold on to it. They wait. They say, tell you what, if you can get a better deal, let me know. Give me last look. And then I'll see what I can do.
Yep.
Well, that's not getting the best deal. Because
correct.
Now the only way they're going to lower their price is if someone else gets a lower price. Well, that's not getting the better deal. Versus, so I just did this on a renewal. You see, I think, and you've talked about doing this, and I actually got the stones and I ran it, right? So it's an account that I control. It's a recovery program. And I got a specialty program to engage. I got him comfortable with it. He came out with his number, and it was about maybe 10% less than expiring. And I thought, I don't know if he came out with his best deal.
Yeah.
And so I went to him and the incumbent. I said, hey, look, there's competition this year. I really appreciate it. What the customer's going to want to know at this point in time is, do you have them in your best rating tier? And if not, what do they need to do to qualify for it? And what type of pricing have you applied? Is it the best? And if not, what do they need to do to qualify for it?
You say pricing, you say credit?
I think I said pricing.
Oh, okay. But is that what you were referencing?
Yes, I was. And the specialty program came back, just said, this is my best pricing. And the other market came back and said, well, can you tell me where the other one's coming in at? And I said, not in the business of sharing, but if you could.
But it's 72,500.
But I'll tell you, it's competitive.
Yeah.
And the incumbent came down 20% or more.
The incumbent was not the specialty program, correct?
Correct. Now, they have a good product for this, but it wasn't like the specialty program for it. Now, what I did after that was I went to the customer. And actually, before I hit the underwriters with that line, I told the customer, I said, I got this specialty program to come in. It's a little bit less, but I'm not 100% confident I got the best deal. I'm going to ask this question, see if I can negotiate it down a little bit. He said, well, it's good that you got it down, and I really appreciate you going to bat and trying to get the best deal. So I came back after it was done. At this point, the specialty program looks higher. The pricing is more, but the deductibles are lower. There's less sub limits. The coverage terms are better. And so I went through it one piece at a time. I said, here's the pricing, but here's all the differences. Whichever one you want to choose, I will support you, but I want you to understand that these are the differences. And he said, well, you know what, man, in this situation, a couple $1,000 isn't that big a deal. I'd rather have the better program.
Yep.
That's what it looks like to be an advisor. But if he had two brokers in there, one's going to be saying, you don't want to buy that program, even if it's cheaper. It's going to do this, this, and this, and this, and this. And then it puts the customer in the middle of this rock fight that they don't want to be in.
And they have to figure it out. And they don't. Now, who can they trust?
Nobody.
Each person's trying to sell them something, rather than give them true advice. And everyone likes to sit there and say, well, no, if there was a better program out there, I would tell my prospects. Maybe. And maybe sometimes I'm sure you have at times. Like, hey, look, generally, this is just better for you to go the different direction. But if it's close and it's in the ballpark, it's like, you're going to try and sell it. And the reality is, that's not even the worst part. The worst part is they probably left money on the table. So now you're picking between two deals that may not even be the best possible deals because you mismanaged the negotiation. So it's like, yeah, Travelers is 10% less. But if you handled it correctly, both of those could have been potentially in a different pricing tier and could have been 40% less. So you're picking what you think is a good option, but you may not be. The reality, too, is the prospect, what they want, the answer, you were talking about the underwriters. This is where I was going with it. The answer doesn't even matter from the underwriter. Hey, what's credit structure? What's the credit structure? What tier are you in? Oh, I'm not telling you. That's our best price. Okay. I don't care. I'll just tell the client, and then we'll see what they think about that. Right? And we're not just doing it in a nasty way to the underwriters, but it's just like, that's what it is. Like, the answer doesn't matter. We just have to report back the data to the prospect. Hey, Carrier One said they wouldn't tell us how they arrived at the pricing, but their pricing looks pretty good. But that tells me there's something sketchy going on, because why wouldn't they tell us? Right? And then the second one, they said they're a little bit higher, but they gave us everything. This is how it's priced. This is what the credit structure looks like. This is what the tier looks like. This is how it is. Here's the terms. I feel pretty good about that. Right? It hit me. We were talking about inside the program a couple months ago. I went and leased a Tahoe. And my wife and I, we've always bought cars. We leased one time, but I don't even count it because I didn't do any research on how to negotiate. We bought the lease out like quickly after. But I'm done buying cars. I was just like, I'm done. I am like, I've tried everything. I bought a new car a few years ago. Highlander, you got one of those?
Yeah, I like it.
4 years in, I hit 60,000 miles. All this damage. Freaking Toyota. I'm like, okay. So I traded in, and I'm like, well, let me try a used. I always want a Suburban or Tahoe. I'm like, let me try a used Suburban Tahoe. I'll play that game. Like, I'll get it. It's used, less off the sticker price, and then I'll play the maintenance game. And I had a good mechanic, and he was working with me. And then finally, he's like, dude, he told me in the fall, he's like, this thing could go another 80,000 miles. Sweet. Spring, I bring it in to swap out the snow tires. And I don't know if you have those down there. In the winter up here, we put different tires on to get through the snow. And he goes, you got to get rid of this thing. I'm like, dude, 6 months ago, you told me I was good. I didn't do 80,000 miles in 6 months. He's like, yeah, I changed my mind. Get rid of it. So anyway, I'm like, I'm done. I'm done playing this game. Buying this. I'm like upside down in all these cars. I owe money on like maintenance. I'm like, I'm done playing it. I just want to lease something and have it be new. I want to try the game. And we'll see. Maybe at the end of this, I like it. And I keep going. Maybe I go back to mine. To be determined. But I'm like, I need to figure out how the hell to lease a car. I've never done it. And I don't want to get rolled. I don't want to get smoked on this thing. So the first dealership I went into, dude, I knew what I wanted, Tahoe or Suburban, one of the two. Guy goes, hey, man, your lucky day, dude. $8,000 in savings. Sweet. I didn't buy it. It's like, but we're saving you $8,000. I'm like, yeah, but what I couldn't answer was, I don't know. Could I have saved $40,000? If I could save $40,000 and you're only giving me 8, well, then I'm not comfortable with that. So what it proved to me going through this process was the actual issue isn't savings. But going into it, I'm like, I want to save money on this next vehicle that I purchased. That was my mindset. Dealership 1, I walk in, we'll save you $8,000. Not buying. If the only criteria was saving money, then I would have bought. Sticker price is this. You saved $8,000. Great, let's do it. So then I got really into it. I'm like, the psychology of it. I'm like, well, why didn't I do that? And then how do we relate it to the insurance buying decision? Again, because I didn't actually know if that was the best deal. Was the next dealership going to give me $10,000 off, $12,000 off? And then I started doing more and more. Me and Claude got into it for a while. I think I put in like 15 or 18 hours into researching this.
I remember your eyes were kind of bloodshot.
I know. I was like a lunatic. Was that like smelling salt or is it bath salt? I don't think it's bath salt. I think bath salt's
I think it's smelling salts, like what they do in football games on the sideline to get you pumped up. Oh, yeah.
I think bath salt, you end up walking down the street, trying to eat your own arm, yelling at the neighbors.
Yeah.
So I didn't do that. I didn't do either, but maybe I could have used some smelling salt. Anyway, the point is, I started doing all this research and I uncover, okay, there's a way to lease a vehicle. There's certain numbers that you need to know. What are the numbers? Well, there's a money factor. That is the equivalent to an interest rate. Now, the dealership, they get the money factor, they get it for the buy rate. The buy rate is what they buy it for. The money factor is what they give it to you for. They can mark it up.
Okay.
So that's where they can make profit. So those are the two main numbers that I had to worry about with leasing. The other one was the residual value. You really can't negotiate or change that. It kind of is what it is based on the vehicle mileage and all that. And then there's the actual sticker price. And they take the sticker price, they subtract out the residual. And this is turning into a car lesson, but we'll get to the point. My point is I figured out these numbers. I was so damn confident going into those negotiations because I knew what to look for. So they're like, hey, what do you want your monthly payment to be? I go, I don't care about my monthly payment. I obviously did. I had a number that I wanted to be at. I said, I'm concerned about your money factor and the buy rate. Talk to me. One dealership, dude, I asked them 5 times and he had to go back to his manager 5 times. And they didn't give it to me. Finally, I'm like, dude, forget his name. It was some crazy name. I'm like, I need the freaking money factor. Otherwise, I'm not making a decision. And then they wrote it out on like a napkin. I'm like, okay, that's believable. Right? One other dealership wouldn't give me the money factor. Their monthly payment, the one that said they would save me $8,000, their monthly payment was within probably $50 of where I landed on the dealership I bought it from. I shouldn't say it, maybe 150. The other dealership was fully transparent with exactly what I wanted. I got a higher trim level, higher mileage in the lease because I knew how to negotiate the deal. So if I just looked at the monthly payment, it's like, well, that other one wasn't that far off. But because I knew what numbers to ask for, I then had more information. And the ones that didn't want to give it to me, I'm like, you guys are just sketchy. Why wouldn't you tell me? If you're not going to tell me, that means you're probably sticking it to me. So tying it back to insurance, the consumer has to know the numbers they're looking for. What's your credit structure? What's the max credit you can get? What credit are you getting? What tier are you in? If you know those numbers, you can determine if you're getting a good deal or not. It becomes very obvious.
Yep.
Now you know how to lease a car, Daryl.
I walked out of this conversation a wiser man than I walked into it. But I mean, at the end of the day, what people want is they want to be able to trust the transaction. And they're looking at the broker, they know the broker that gets paid commission, and they're saying, how can I trust you to do what's in my best interest when you get paid more to do what's in your best interest?
Yep.
That is the rub. And that's why we talk so much about commission versus fees. And look, my agency's never figured out how to charge fees. I think it's on some level, a lot of us are always going to be commission based. But you can, if you have a clear and transparent structure about how it's going to be negotiated so that the customer can understand it, so they understand the rules of the game, so that they know at the end of the process, you will have executed a strategy that is in their best interest. That's actually what they want.
Yep.
That is really what they want. They say it's price, but they say, I think I'm getting gouged. I think I'm paying too much. And at the end of the day, it's because they don't trust the process that was used to come up with those numbers. And they feel like it's inflated. And they feel like people are trying to build in as much fluff into that number as possible. And they don't know how to create the competition in order to do it. And that's why they get multiple brokers.
Yep. That's the key. And you nailed on something there. They say it's price, but it's not really price. It's deeper than that. It's the I guess psychology of it is they want, I was a psych minor. They want human sexuality was a crazy class. It was one of the electives we had. It was nuts. Thursday night, 6 to 8 before everybody went out. It was wild.
Awake all night on Thursday night.
Yeah, like the stuff you learned, like, oh my God. Way different than sex ed in 5th grade. I'll tell you that.
Oh, yeah. I believe that.
Anyway, we're getting on a tangent here. the deeper meaning for these people is they can't answer the question, did I get the best deal? That's really but they don't know how to say that. So it comes out as I want to save money. I'm 37. Believe it or not. I wish I knew my biological age. That would be a great quick flex right there. But my biological age is 28. I don't know it, but I should get it. I should get it tested. Anyway.
What's a biological age? I don't even know what you're talking about.
So biological age, like it's this like biohacking stuff where your actual body is younger than your actual age.
Oh, I don't think I want to know that number.
Well, between the cigars and fireworks, I don't know. Right now, it might be higher for you. Yeah, wait. I would test it at a different time.
I'm invincible.
Yeah, exactly. Hopefully, all goes well. Hopefully, you are invincible this weekend. Anyway, the point is,
but they don't trust the process.
Yeah. So the reason I was saying I was 37 was not to flex on my biological age that I don't actually know right now, but I will know at some point soon. Is I've bought cars since I was like, I'd say 16, but my parents bought my first car. Thank you, Mom and Dad. I had to pay for the gas, though. Everyone thinking I had a silver spoon shoved up my throat or down my throat. I'm not Daryl, okay? So I bought cars since then as an adult, right? So I've bought quite a few. My point is, I have never left a dealership feeling good ever in my life until this past time. And I called my wife. I'm like, I worked those SOBs, worked them. And it wasn't even that I took advantage of them. I knew the rules of the game, so it was an equal playing field. I felt level. I didn't feel like they worked me like in a negative way. I didn't feel like I took advantage of them. Nobody took advantage of each other. It was like I worked the negotiation effectively because I knew the rules of the game. And what I realized walking out of that, price was never an issue for buying a car, even though for years I would ask, hey, somebody got a new car. Oh, did you save any money? And so everybody wants to know, you save money? You work the dealer? You get hosed? Oh, I got to save money when I buy a car. It's not about that. It's knowing that I actually got a good deal. That's what I actually wanted to solve. Because if you think about it financially, this is the most expensive car I've ever bought. Or bought, however you'd say that. Most expensive car. So did I save money? Technically, no, compared to my last car. I spent more, but I felt better about it because I knew exactly what the game was. I knew the rules. That's what I was trying to solve for years, and I could never articulate that. And that's what the prospect's going through with insurance. It's not actually about the price. They just want to be able to sleep at night going, I know I did everything possible to get the best deal on my insurance because it's one of the biggest line items I have.
Yep.
So that's what you're playing into.
Yep. And they'll do it by trying to get all the markets involved. They'll run all kinds of different strategies that won't work and just shoot them in the foot. And that's why if you show them a better way, they'll sign the BOR. And that's a good place to put a bow on it, don't you think?
Yeah, you got to go prep your fireworks.
I do.
So what do you do? Do you cut a hole in the attic, in the roof, and you shoot them out that way?
There's an open area in our neighborhood where I go and I'll set up there. And then it's kind of fun because after a period of time, other people in the neighborhood will start to gather around. There's like this ravine green area, and they'll start to line up on the sidewalks on the other side.
So they know you do it or you do it every year?
Yes, ish. I mean, I've taken a couple of years off, but yes.
Do you have Bittner Henry signs throughout the
no
advertising?
This is Daryl Henry Inc.
Gotcha.
For love of the neighborhood.
So the neighbors, they must see it coming every year. They must expect it.
I think so. They kind of know that there's. I used to do it with another guy. I don't do it with him anymore. But they know
blew
that
both his hands off 5 years ago, so I can't do it with him anymore.
So yeah, we call him Captain Hooks. All right, let's put a bow on it. So look, BOR is not just a way to win business. It is a mindset. It is a strategy. It is a one best way to go to the market and do things. And if you don't buy into it, all the way, it won't work. So it's about buying in. It's about going all in on yourself. It's about believing that you're worth it. And second place is not good enough. So we'll talk to you next week. It's BOR or bust, baby.